tariffs hit the market? Who cares? Buy the dip, trading at the highs of the session. Earnings all over the place. Retail sector, I mean, all over the place is the only thing I can say. Some stocks getting hit on some pretty decent earnings. We got news on drugs moving. Amgen disappoints. That helps other stocks. When you talk retail, you want to have Ryan Craver on of Commerce Canal. He'll join us at 8:35. We got a lot to cover on this Tuesday. Let's get it started on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Get right to it. S&P's up 16 handles at the high of the session. Couldn't get that new all-time closing high today. Maybe we can today. Buck pulling back 22 cents, 106.54. TLT, big day yesterday. Give it a little bit back, down 38 cents, 92.35. Crude up 29 cents, 72.39. That's your USO. GLD, that's in the green, 56 cents at 243.04. Silver ETF, trying to get over 28, up 21 cents at 27.84. Bitcoin retracting from that six-figure level of 100K, down $2,815 at 92,130. Let's bring in everyone at the same time here, and let's get started. Triple D, Christian Fromhertz, and AB. Gentlemen, how are you doing on 2 days before the big feat? Well, not for you, Dennis. You're working Thursday, but
yeah, I have to work. I never get a day off.
How are the pre-Thanksgiving preparations going?
Christian, that's going to be thrown to you because we had our Thanksgiving here in Canada 6 weeks ago. It went very well. Thanks for asking. It was good. Thanksgiving was great.
They're going over here. I'm hosting Thanksgiving this year, so I've got some family coming in, and it's going to be interesting. I think I've got the paces covered, but I don't know. I feel like I'll have a curveball thrown at me, but I'm ready. I'm ready for Thanksgiving. I also have a turkey trot to run, 5K on Thursday morning.
No way.
As long as the weather is okay, because we got some bad weather. Yeah.
What's the time you're going for on this turkey trot? Do you run? Are you a runner, or this is just on Turkey Day?
I'm looking for the finish line. That's the time.
Looking for the finish line. Just trying to make it there.
I try to run I try to run a couple 5Ks every year, especially for the turkey trot. But I'm not time. My goal is just to be happy and maybe have a nice beverage on the finish line somewhere around there.
Okay, AB, let's get us started here. 8:03. I think for a Tuesday of Thanksgiving week, we have so much to cover, but we had some action last night. AB, fill us in.
Yes, we're going to start today talking about some tariffs. So tariffs, a big discussion topic during the election. Trump had mentioned, at some point talked about, up to 50% tariffs on all goods from China and like 20% tariffs on goods from everywhere else. Last night, we got some clarity on what some tariff policy may look like from Trump's administration. Right now, the figures are 25% tax on all products entering the country from Canada and Mexico, and an additional 10% tariff on goods from China. So that would put the total tariff percentage on goods coming from China at 35%, which sounds like is a lot, but is actually less than what he was talking about on the campaign. And then we also know, Trump's tendency to kind of use these types of threats or ideas as like negotiation tactics. So I think there's still, even though we did get this report, I think there's still some people that are uncertain if that will actually end up going into practice like that. But you did see certain stocks getting hit on this news as, you take a look at General Motors, which produces a lot of its cars in Mexico, down 4% today. So Definitely seeing some impact in the market. But if you take a look at Chinese stocks, actually not too bad this morning, which shows you again just that the expectation was for the tariffs to be even a little bit higher than what they stand now, which would be 35% on goods from China.
I mean, everybody just hears a 10% headline and they're like, 10%, that sounds cheap on China. So they buy some China stocks up last night. I mean, 25% to Mexico to Canada is shocking. Like Canada, obviously a lot of oil comes from there. So that's very interesting. He did say in the tweet or whatever you want to call it, because it was on his own platform there, the social media, whatever the platform's called.
True Social.
True Social. He did say on True Social that if they can stop the fentanyl, then he'll remove the tariffs. So basically saying, look, Canadians, stop shipping fentanyl to the States and we'll remove the tariffs. I don't know how much fentanyl comes from Canada and maybe a lot from Mexico. I'm not sure how they curtail that, how they stop that. Honestly, I don't know how Canada really gets tied in with all of this, but it is what it is. 25% is a huge amount. I don't know if anybody's going to like seeing the gas prices if they do put that 25% tariff. A lot of oil coming down there from Alberta. Not sure anybody's going to love the bump up in gas prices, but that's probably what would happen if that 25% tariff gets put in place.
Christian, you're going to be our tariff expert?
I'm gonna give you a hard no on that, but I think the reactions, just as you guys are mentioning, just not as big as what we've seen previously. So AB mentioned that maybe some of this was already priced in, and I saw the small caps move the most, and sometimes the small caps you can kind of think about that. Maybe they're a little bit vulnerable, but they snapped right back. And I mean, it seems like that you got the knee-jerk reaction last night. I know that some of the car makers, which we could talk a little bit about, are kind of feeling the brunt of it. There's always winners and losers in this type of thing, or names that are going to be a bit more sensitive. But yeah, I mean, I think the market shook it off really quickly.
Market saying it doesn't care.
Yeah,
it is basically right. I mean, they just bought the dip. They came in. You were trading the reaction. I mean, it was down for a little bit. You can see on the 15-minute chart here, but cooler heads prevailed. Buy the dip. I mean, that was a quick dip after hours, but the market's saying, we don't believe you.
I think so. I think the market is shrugging it off again. Mexico, Canada, China. I mean, tariffs maybe are going to come in, inflation, but this market tends to not worry about what's happening 2 months from now or even, further down the road. This market's always focused on right now. What's happening right now is seasonality still in place. What's happening right now is buy the dip has been relentlessly working. So everybody last night, when the handles S&Ps fall 20 points, they're like, "Oop, better get in there and buy some stocks." And that's exactly what's happened here again. I don't know. There is cracks here happening, though, and maybe we should just go into it. NVIDIA, sorry, still fighting the cold. NVIDIA, not having a good day yesterday. Obviously, there was some news there with Amazon potentially, producing, some competing chips here. That's why NVIDIA was getting hit. But you just look overall, and you definitely are seeing a little bit of relative weakness in the Magnificent Seven. We talked about that yesterday with Tim Seymour as well. Maybe it's a financing trade because obviously, IWM making new highs. You're seeing money rotate into other areas. That money's got to come from somewhere, and maybe it's coming from winners like NVIDIA to a certain extent as well. But what does that mean for the overall market? I'm going to throw it to Christian here because it's a confusing market here. A lot of times when you see some of the laggard stuff, or especially some of the meme stuff, we really saw that yesterday where, GameStop was having a pretty good day. A lot of smaller high short interest names were, even AMC was perking up. A lot of times when you start to see those names start to perk up, it's usually sign of excess. And Craver did a whole special yesterday on excess. He had about 25 companies he covered that are definitely, run up like up 100, 200, 300% in the course of a few months here. And maybe we're just a little bit, overdone on a few of these stocks. I want to know what Christian thinks.
Yeah, I thought that I saw part of Kramer's special, and there's a lot of stocks that he was going through that have run up, and yeah, when I start to see, I mean, the majority of names that were really going up yesterday or had the biggest moves were high short interest names, and not just like high short interest names, but like I saw calls yesterday in like Haynes brands like HBI. So I mean that's not a name that I really want to go long. And there's trades to be made in this stuff, but it's more short-term trades than longer-term investments. But I started to look at a number of my positions. I've been long Datadog for the last couple of days. I had the trade desk, so DDOG. I had the trade desk on TTD,
Yeah.
and I just kind of looked at some of these moves as basically just a bit. I don't want to say exponential to the upside or parabolic, but they've made some really good moves. And I just look at some of these charts too, and I say, hey, I wouldn't mind a little bit of consolidation. I wouldn't mind a little bit of give back. We are going into month end. It kind of felt like there was a little bit of a month end trade yesterday with like Apple going nuts in the last hour. So I don't know if they pushed that month end trade to yesterday, considering that month end is on Black Friday. So there, but
Ooh,
but
that's
typically what I see is like that the end of months there is a little bit of profit taking, and then they go back and they start buying stuff off in the beginning of the month. So I took advantage of that big move yesterday. I thought that the gap up, and I was looking at like things like the tick index for extremes, and I just sliced off a bunch of positions yesterday, and I just said, hey, I've had a good November.
I
Some of
think
these
so.
names, yeah, I'm I don't want to get too greedy, and
Yeah.
I also want to be a little bit more nimble, because when I'm looking at my positions, when I've got too many positions on, I'm not looking at new opportunities as much. I'm trying to manage those positions, and I want to be fresh here for month end. I want to be able to kind of move around and be nimble, and maybe start to add to some things as they move down a little bit. So yeah, I took advantage. I just thought that it was a little bit too. I was gonna use the word frothy, and I took off a good number of my positions. Now again, I was pretty overweight. I had a lot of swings on yesterday, so I took about half of them off.
All
I
right,
mean,
let's get
this
to.
is it. I don't want to go on from this conversation just yet, AB, because this is important. We're trying to get context on whether we're really, frothy here and we should be taking profits. I'm with Christian here. I mean, we've come a long ways. There are pockets of froth, no doubt. I think it was actually perfect timing for Kramer to do that special last night. He sees it as well. We know things can get more frothy. It doesn't, it's always the hardest thing calling a top and saying, well, this
It
has gotten
is.
to a
Yep.
ridiculous level. There's definitely stocks that are perking up that have been beat up. Think about big pharma like Merck starting to show a little bit of life here. So it's not just, that there's, froth across the board. There's just, starting to see definitely broadening out, and that's a good thing. But, when Palantir is up, what the hell is Palantir up in the last, month here, percentage wise? I mean, go out to your monthly and, we were $35. The stock's doubled in a month.
yeah.
Really, like you're getting to a point where when your stock starts going up 75, 80, 100%, 200%, some of these stocks in 6-8 weeks, it's time to take some money off the table because they typically don't double again. Unless we're in 2020 and we're just going to blast off and it was COVID, and we're going to have another, and everybody has COVID around here, so maybe we are. But I mean, it's a joke. But I mean, I think at this point in time, if you're coming in and saying, oh my gosh, I've got to just buy stocks here. I've got to go buy Palantir. I've got to go buy because these things are just going to continue to go up and double again. I think that's a little bit what, we're trying to say, me, Christian, and even Jim Cramer, is that we're at a point where some of these stocks have maybe just got ahead of themselves a bit. Not saying the market's going to crash and it's over, not by any means. But I think taking some profits into this when your stock's up that much is prudent at this point in time.
I think eventually you're going to get a little bit of a buyer's strike. And I mean, if you look at that move from yesterday, I mean, I was anticipating it a little bit early. I mean, we just blasted off in the first 15 minutes. I mean, we had a little slight dip off the open, then we just blasted off, and it was like, where there's no offers in here. And then that 945 turn. So if you look at it from yesterday's high down to the low from yesterday in the S&P, that was a 60 handle intraday decline. I mean, that is a big move between, and that is just a symbol of people selling into strength. Like, yeah, okay, it's come and lift my offers. Come and lift my offers. The buyers are there, the momentum buyers, then they ran out of them. So I'm just looking at this ballpark levels. I'm not, each stock is individual. I'm looking at the S&Ps in the 6,000 handle. We're hanging in here. We're keeping it close. I like to see us form just some solid support here at 6,000, build another base, consolidate, and then push our way up to new highs. But it's hard to say, take profits in some stuff that's got absolutely killed too. I mean, just seems to be a little
Well,
bit
and then we're not talking about those stocks either. Like,
right.
there's definitely some stuff that has lagged significantly. There's definitely some sectors that have disappointed here. And like we talked, even, pharma has been underperforming massively. The XBI got killed last week. It's a nice bounce this week. But, obviously it's not all stocks, not all sectors just killing it. It's not like this market has just been on fire. Really give a perspective. The S&Ps, steady as she goes, has been a great year, but it's not like it seems out of possible realm of normal. For the S&Ps to be up 20% in a year or 22% in a year. One more thing, again, I know AB wants to move us on. I want to go to Bitcoin though here just for a second here, because this is another example of maybe just getting ahead of itself. I'm still long Bitcoin in the long-term account, still a hodler, still think Bitcoin's going to eventually hit 100,000. But we had a really big move here too in November. And I mean, maybe MSTR is the best example. Stock went from 220, started the month around 200 and what, 25 bucks, went to 543. So the stock doubled, more than doubled in the month, more than doubled, like up 130%. You had the whoosh, the violent rug pull, which it happens on all these stocks eventually. It's just a matter of when. When stocks start going up 100, 200, 300%, eventually there's a vicious rug pull. That's what we had happen 3 days ago with MSTR, when it was like people were buying it up at the highs. It didn't matter. The Carter Worth came out with a huge bearish segment. We're buying up 60 more points anyways because this is going straight to 1,000. Rug pull happens, boom. Stock falls basically 160 points in a day. So bang, gives back a third of the entire November move, almost half the November move in one day. Now you get always a dead cat bounce last couple days, but now you're getting like starting to leak here again. So now you start thinking about those lows. 371 on MSTR gets down below that, then that becomes concerning. Is there more paying ahead? Again, when Christian did his excellent fundamental analysis of this and just looking at intrinsic value of MicroStrategy holdings of Bitcoin, the stock's value is probably under $200. So you're still like trading 100%, maybe even 150% more than the intrinsic value of the holdings. So there's no value investor coming in here. Sorry, none, zero. Not one value investor looking at this. If the momentum starts to slow, that's where you get the separation. That's why you get these rug pulls, because the momentum guys like, get me the hell out. Value guys are sitting down here at 150 saying, this is where value area is. So that's why you have this, gap where once momentum breaks, value investors aren't here, and that's where you get these violent sell-offs. Not saying at all that MSTR is going back to 150. Not saying it's going back to 200, but saying the excess in MSTR is indicative of a lot of different stocks. And we see a violent rug pull in one of the leaders, it means there could be other violent rug pulls coming. So just be careful if you're chasing stocks of 200, 300%.
And I'll just going to add one final point here, and then we can move on. But it's not getting like bearish or anything like that. It's just realizing that we've had a really nice run and backing and filling. You are going to see some rug pulls on names that went ballistic to the upside. I mean, I think you're going to see a blow off top on some names, but for the most part, it's just, it's normal for the market to kind of go up and then, come back in a little bit and digest. So, not getting bearish or anything like that, just understanding that, I feel like the market and a lot of names got a little bit ahead of their selves for short term.
All right. Well, let's.
I'm sorry. One more thing.
AB, we're never gonna let AB go.
I know. I'm sorry, AB.
AB's just leaving. He's out of here. He's gone.
No, I'm sorry, AB. Remember last week when I was talking about the Bitcoin futures and I was talking about the rally and the open interest? So I don't know if there's been a rollover in the contract, but you definitely have. Look at that. There must be a roll. I'll have to do some more. They must be rolling over to something else because look at the open interest here. While the market there were people now it's just dropped 5,000 yesterday. That's huge. So that open interest, I mean, people were they were selling into that move. So I just want to last thing, then we'll move on. There's a key area in Bitcoin here, and it corresponds with MSTR. Look at your lows right in mid-November here, and these are the futures. I know it trades 24 hours, but look at all these lows around 86, 87,000. To me, as long as it stays above there with strength, bulls totally in control. And then if you look at MSTR, look at that. Those exact same days, it had some consolidation, a couple lows in the same area. Let's call that the 322, 323 area. So right there, those are some good levels there in MSTR and Bitcoin.
All right, before we get to earnings real quick, my only point on this conversation I was going to make, I got to take the other side, just that to me, it doesn't feel, at least if we're talking in the overall market. Bitcoin, yeah, sure, that feels a little toppy, but in the overall market, it doesn't. And for a couple reasons to me. Right now, look, there's more bearish sentiment out there than the historical average. Not by much, but the historical average is 31%. Right now, we're at 33.2%. That's not typically what you see when there's like all this euphoria in the market. I don't think retail has gotten as into just like buying the overall market as if you look at what was going on in 2022 before we kind of topped out there. And then the other thing is if you go back to 6 months ago, all the bears were saying the breadth is terrible. It's all the Mag 7. Now you have the Mag 7 a little bit weaker and other stocks heating up. And the bears are saying, look at the Mag 7. It's so weak. It can't keep up. So it's like, I feel like it's just money rotating right now.
It is.
Certainly, a little extended on some valuations. But again, to me, there's just not as much euphoria. It hasn't gotten to the point where my mom is like, hey, I want to buy the market or the S&P 500 and stuff. And when stuff like that starts happening, when there's all this euphoria, that's
the mom indicator.
The mom indicator, exactly.
Yeah.
All right, let's go to some earnings, though, because we do have a lot of stocks to cover and not a lot of time today. Let's start with Zoom, good old Kathy stock, which I don't think she's even in anymore. But Zoom reported earnings yesterday after the close, reported EPS of $1.38, beat the $1.31 estimate. Sales came in at $1.18 billion, beat the $1.16 billion estimate. They gave Q4 guidance, EPS guidance, $1.29 to $1.30. Very tight spread there in between 129 and 130 versus the 128 estimate. So slightly higher EPS guidance there. But the stock is trading lower, down about 7% or $6 as we head into the open. That is despite some price target raises from analysts at Bank of America, Benchmark, Deutsche Bank, Wells Fargo, Jefferies, and more. So the analysts liked it. I'm not sure why the market did not.
Lots to chew on here. I mean, again, the stock has been running. It's been on a pretty good move. $60 3 months ago to 90. So you could say, and again, exponential move here last few days, going from 78 to 92 ahead of the number, ahead of the print. So the bar was very high here. Obviously, they don't hit the bar. Zoom has a tendency to do okay on the numbers, but they still whack it. We've seen this happen before. So I'm not surprised. Do they come in and buy the dip on this? They changed the name now. It's not going to be Zoom Video anymore. It's a Zoom Communication. They're trying to get away from that, that we label it a one-trick pony. I still label it a one-trick pony. They got, the Zoom Video, and that's pretty much it. They need to come up with something else. We know that's a huge cash cow. They're probably working on it. I'm mixed on this one. I don't even. I'm just some of them. You just curveball. I'm gonna sit.
Oh, total curveball. We're gonna put Christian on the spot on this one because this is absolute no man's land to me. I couldn't give you a level. Go ahead, Christian.
I thought it ran into the report too much. I mean, that chart that you've got there on the top right. I mean, look at that candle yesterday. To me, that was like that's a no touch. Again, they're not doing. We all know what Zoom video or Zoom communications, whatever they're calling themselves now, that with the name change. But we all know what they do. Is there going to be major growth here? I don't think major. Is it going to be okay growth or, sure. But there's no way I would buy this name after it makes a big run like that. I would be a seller in this. I mean, it's already down, but I think there's better stocks out there to go into.
All right, let's keep the earnings train ticking here. We will go to Best Buy here following Zoom. Best Buy down very slightly this morning, down about $2, 2% on the report, which came in earlier this morning. EPS $1.26, missed the $1.29 estimate. Sales came in at $9.45 billion, missed the $9.63 billion estimate. Best Buy cuts the full year 2025 revenue outlook from $41.3 billion. 41.3 to 41.9 billion to 41.1 to 41.15 billion dollars there. So, obviously not a great sign if you're cutting your revenue guidance there. So, Best Buy's earnings slightly disappointing. The stock actually popped higher, it looks like, and then gave up some of those gains. So Best Buy trading down slightly on this report.
This is this market that just buys the dip on names, names that they like relentlessly here. And Best Buy has now turned into one of those names that they like. This is not a good report. Nothing was good about this. Maybe it was a little over it down to get down to the 85 low, which was there a few days ago there. But, cutting guidance. I never like buying stocks, but the action here, you got to say, is productive here. I mean, when you're seeing stocks come back to almost scratch after cutting sales guidance, you don't normally see that in a retailer here. So I think they still just like the story here, and that's why the buy the dippers are coming in, but the quarter wasn't great.
Get a nice
know what to think about this one either. Tough charts
I
today.
know, man. You guys heard some of these charts here today. Usually I can zero in on something. I will say right now, just looking at this chart, boy, you got halfway back of that move from the August top to the low, and then you got back there yesterday. So I would say, like, longer term, I mean, unless this thing gets back, I think sellers are going to come off the 95 level. So until this gets back above 94.5, 95, I think the path of least resistance is lower. Shorter term today, if you did buy the dip, if it fills the gap at 91.97, would it be too bad? And scratch would be at 93.03. Christian, you got anything? I know you gave us some stats yesterday, some favorable stats on this one. I guess the day isn't over yet, correct?
Correct, but I'm going to say next. Let's go to the next retailer.
We're all passed on this sucker. Next, we haven't seen any clean setups here. This is what this market is right now. It's mixed signals. Mixed signals. You got some leadership failing. You got some broadening out. Then you got the meme trades getting hot, which is usually a toppy signal, but you're coming into seasonality. This is a mixed signals, man. It's not an easy market to call here right now. Sometimes you come in and it's like, it feels like, it's going to be a selling kind of day, or it's a buying kind of day. This one's a mix. This one's a mixed signals here. So even the earnings, the underlying earnings, feel like they're mixed. Where do you want to take us, AB? Find us something.
Let's go to not mixed signals here, just plain bad signals from Kohl's. KSS company reported earnings this morning. EPS came in at 20 cents, missed the 28-cent estimate. Sales came in at $3.5 billion. That missed the $3.63 billion estimate. So double miss there. EPS guidance of $1.20 to $1.50. The prior view was $1.75 to $2.25. Double miss. Cut the guidance. Net sales decrease of 7 to 8%. So no way to mince this one. You're talking signals again. Bad signals here. Market agrees. Stock is down $3.11 or 17% on Kohl's. So yeah, I mean, not a great morning if you are long Kohl's.
Okay, new strategy, and this was a slam dunk actually last night. When your CEO is basically booted the day before you report earnings, it's usually not a good sign that the earnings are going to be good. And last night at 4:30, it was announced that CEO Tom Kingsbury is planning to step down and being replaced by the former Michaels, because, they did so great with Michaels, Ashley Buchanan over there. The former Michaels CEO is going to come in to try to turn the story around. When you see the CEO basically get the boot, 4:30, the night before they report earnings, you short the stock or you sell the stock because the earnings were probably not going to be good. The quarter is an epic disaster. I mean, 20 cents versus 28.3. These are big misses. The guidance is even worse. The view of $1.75 to $2.25, $1.20 to $1.50. I mean, you're talking about a 30% miss here on guidance. This is serious crap here, folks. So, I mean, I think it was a tell last night. Next time, write that strategy down. CEO gets booted day before they report. Probably not going to be a great report.
Wow. Well, if you go into your monthlies and you've wanted to buy this stock in May of 2020 at 15.31, you are having your opportunity to buy it 40 cents cheaper. The COVID low in April was 10.89. I think this is an outsized move here. I think for this one, I will try and give a level, but the level will be determined by the pre-market low. See wherever it falls. If let's say the pre-market low is 14.60, I think it might be one of those days where they overshoot it a little bit in the pre-market and maybe get a little bit of a bounce. But there you go. Back at May 11th. Christian won't even look. He won't even comment. He probably quit the show when we put this this chart up here. Christian, what have you bought at Kohl's lately?
Next.
Next. I love this. Keep it moving.
Let's take a break from earnings real quick because I did see Christian just shared some news in the chat that I hadn't seen yet this morning. Rivian, which has, kind of defied all odds here because I think the consensus was that, with Musk and Trump and everything, that bad news was coming for all the other EV companies. But Rivian closed up over 13% yesterday. And then this morning, confirmation of a $6.6 billion DOE loan commitment. And that, again, is going for a conditional DOE loan for a Georgia plant for Rivian. And I mean, you're looking at a company with a market cap of less than $12 billion, potentially getting a loan of up to $6.6 billion, over 50% of its market cap. Pretty big deal for Rivian. Stock is up about 9% or $1 this morning, up to around $12.64 as we head into the open. Rivian here, I don't know, I mean, this thing had been kind of consolidating for a while, right around $10. And I think I was kind of, even I was kind of scared of dumpster diving in this one. Now I wish I would have around 10, but I ultimately, if you look at the long-term chart, we're still pretty low on there. So I might hop in there still at $12.
10, 10, 10, 10, 10, 10, 10. The stock, it's the support of all supports. If Joel was doing his star levels, he'd give it 100 stars at $10. I mean, even when we had the big pop and then we dropped right back down to 10, we cut through at 9.55. But I mean, all this area here at $10. Can I get the bounce? Are we out of here?
What's the level?
Going? What's that?
What's the level?
I don't know.
I'm looking at 13 is a level that I'm looking at for this thing to kind of get out of.
And then go back to 10.
Yeah, because if you what's interesting about this is there was good news on the stock the other day, and it just gave it all back. And I'd like to hear your guys' opinion about this too. Like when there's good news on a stock, I like to see it kind of firm up. I like to see it, because again, a lot of these names, they're going to get pops on news, but I just didn't like the fact that it ran into 1245, 1250. And then it gave a lot of it back to your point, to heading back to the $10 or $11. So maybe this time it can kind of hold in there, because this is in the wheelhouse of right now what this market likes. It's a smaller cap, the market likes smaller cap names. It's got a high, the short interest is 17% of the float. So it's got all the makings of like a possible squeeze. Can it get through that overhead resistance, which is, I see a lot of overhead resistance around 13.
Yeah,
But I think
13. Yeah, 13.10 was the high the other day on the 13th. So, boy, I would say between here and that 13.10, I mean, man, you have to be, if you got caught in this move here, you got to be like, wow, this is anywhere near 13. Boy, oh boy, I think it. Keep your eye on your pre-market high, major 13.10. That also matches the high that you had on September 20th at 13.15. But you know what? We got a guest here in the background, and we're gonna go to him. And what a day to have our retail expert on, Ryan Craver, Commerce Canal, coming up right now. All right, let's bring him on stage. None other than Ryan Craver, Commerce Canal. How you doing today, Ryan?
So well, happy Cyber 12 to all of you. Good morning.
Cyber 12. What's Cyber 12?
So historically, everyone talked about Cyber 5, which was essentially Thanksgiving through to Cyber Monday. As they've pulled sales forward, they've lengthened further in. So it has become now Turkey 12 or
Whoa.
Cyber 12 up through the end of Cyber Monday. So a lot of the sales have been pulled forward. And this is technically the shortest holiday shopping window in 6 years.
What does that mean? Does that mean like these, Black Friday sales aren't going to be as good now because you've spread it out more? What does that mean?
Starts earlier. So you probably saw in any of the Amazon advertising, Walmart advertising, Target advertising, Macy's advertising, all of them started a lot earlier. You probably saw in your inbox cyber sales or Black Friday sales starting a week earlier. I mean, we haven't even had Black Friday yet, but if you look at your inbox, you've probably been spoken to about Black Friday from a number of retailers already. So I think the consumer is still going to come and shop. I still think household assets are fine. I think that, we have seen some inflation, but we've also seen some very strong sales from the top retailers start a lot earlier than years past. So I'm looking forward to this Q4.
So do we get a run for some of these stocks into Black Friday like we typically do, or is it because they've pulled some ahead it's not going to be as interesting? I mean, we always think about Amazon as being, a Black Friday play where it starts to get excited. Started perking up yesterday with the news of their chips, but where it's more about what's happening, with Black Friday with obviously the sales. What are your thoughts here on Amazon? One, going into Friday, then two overall.
Yeah, so I do think we have seen quite a run in non-tech related in relation to retail. Amazon specifically, you know what I love to say, it's the toll booth of e-commerce. So I think this little drop that we've had probably over the last month and a half or so is something that would be a buying opportunity. I'm still long-term Amazon. You can't beat that moat that they've created within logistics. You know that they have multiple engines that are firing right now. So advertising continues to grow well. AWS still continues to grow relatively well. And then we talk about Google and Microsoft taking a bunch of share there, but we got to remember how much larger the AWS business is relative to those. And it's the behemoth, right? So them and Walmart combined are earning the majority of the growth in retail. So how can you beat Amazon when it's got such a tremendous amount of opportunity across all those various points that they're running in?
Ryan, boy, we We got it. I'm sorry, Dennis. Did you want
No,
to follow
go.
up?
Go. I was going to
No,
bring
I
him
mean,
into one of the earning stocks, but you go.
yeah, I mean, boy, oh boy, we're looking at some of these charts here, and Best Buy now coming back to scratch. I mean, Kohl's an absolute disaster. Target an absolute disaster here. But then I pull up the XRT here, and the thing for longest time broke out over 80 here. I mean, the have and the have-nots. Is there any buy the dip opportunities? And I mean, I'm looking at well, Best Buy, they've already bought the dip here. Burlington down. I mean, where are people heading? Looking forward. Is it just go stick with the strength, the Gap stores, or is it time to do some dumpster diving?
Yeah, great question. So I've got a couple of thoughts. I think that we have to stick with the best of breed. So you cannot beat Costco. Costco continues to perform. I think that they have not been part of this massive run that we've seen in retail recently. I think take a look at them. Second one to take a look at is TJ Maxx, TJX. TJX has started to talk a little bit more about their international play. They talked about Spain a lot more. I think they're best of breed when you compare them to Ross Burlington, even though we've seen some success in Ross and Burlington in terms of trade. But I think TJX has a better long-term story. I think, you look at the Walmart versus Target play. Walmart continues to play Wall Street like a violin, right? They have that advertising portion. They still have a tremendous comp increase in their grocery, and they still have that great story around digital. Target, I know I've called for his head before, but I think Cornell is not the guy. I think he needs to be replaced, and I know that is completely unconventional, but I just think that they need to start looking elsewhere, or there needs to be an activism play there on the Target side. We've been talking about how poorly they've been trading for way too long relative to Walmart. Um, Beyond that, if you start to look at where the Google searches are for the top holiday gifts, you got some interesting names. So ELF, Eyes, Lip, Face, Elf. They've had a really tough time stock wise, but they're starting to play a little bit better in terms of trade. I definitely look at them because the Google searches and trends are saying that they are doing very, very well. In terms of electronics and anything within that world, I would not play Best Buy, but I may actually play Google. So if you look at Google, yes, we have all the anti-trade, issues, trust issues. We have the Google Chrome spinoff, but they are quietly but surely building decent share relative to Samsung and Apple within the Pixel, as well as some of their electronics. So it's we got a good overall set of names that I think that we can play. Beyond that, stay away from Kohl's. Like, stay away, get out of there. It's death by a thousand cuts. Dillard's, yes, best performer and Dennis's favorite of all time. However, have no growth story, right? So they're just continuing to squeeze that lemon. And Macy's, I mean, how do you lose 154 million in an accounting scandal? Like, come on.
Yeah. That's crazy in itself too. What about the off price? Because we get, TJX reporting last week, stock dipped for a day, rebought. Burlington reports here this morning, stock is dipping right now. Is this one of them they just come back into because off price just seems like where the consumer wants to go?
Yeah, great point. So this is where the customer still likes to go and do the treasure hunt. This is still where we have a comp improvement. So they are continuing to grow sales on that same store base. If you're going to put the three amongst each other, I put TJX first, Burlington second, Ross third. TJX just continues to perform, and they've got multiple banners, whereas Ross and Burlington trade off of just the single banners or the single store groups.
I have a quick question. Hey, Ryan. Do you find that the going to a physical store has picked up a little bit versus buying stuff online? And then, or is it still more online? And then the second part of that question is, what do you think, in terms of putting a little bit of a tech spin? Do you ever look at Shopify, for example, which had a good earnings report, and going, doing a little bit of a derivative play in terms of playing the retail as if that whole XRT chart, if we're getting a move higher in XRT, is Shopify a good way to kind of play that?
Yeah, great question. So to your first question about brick and mortar earning back a lot more share, it's definitely earned a lot more share year over year. So last year was nowhere near as strong as we are in store brick and mortar, at least for our major brands that we represent today. So again, that's to Dennis's point. Where are they going? They are going to malls, so we have seen an increase in malls, but we're seeing a much better trend from the off-price play. So TJ Maxx, Ross, Burlington. Um, Beyond that, in terms of tech spin, I think the two top names, my belief of where you should put your money for the longer term trend on e-commerce, it's Amazon and Shopify. So Amazon, we've spoken about, we know that they're earning the large portion of the e-commerce growth. And then Shopify, they're clearly kicking butt against Adobe, who's got their Magento platform for direct to consumer brands and selling e-commerce. But Shopify continues to perform. I think they shed some of the assets that they fell in love with on the logistics side, got back to their bread and butter, and the story is still intact. They keep growing the GMV. They keep bringing on the top brands. I think that there's still a good long-term thesis for Shopify.
We're on the line with Ryan Craver, Commerce Canal, our retail expert. Let's talk tariffs. Okay. We'll
Boy,
talk about different stocks. Someone asked specifically about Five Below here. Five Below going low. Other stocks that are affected by the tariff talk, and I guess we could throw in Dollar General and Dollar Tree here. Talk about the tariffs effect, possible effects or non-effects on these stocks.
yeah, so we have been here before, right? We remember when we had the previous, what we labeled as Trump tariffs in the first round. What we found at that point is that those who didn't move their sourcing actually were hurt a little bit more versus those who just pushed the cost increase onto the customer. So I do believe that this is definitely going to impact a number of retailers, but I do also believe that they're going to push some of this through to the consumer. I know that we've got some new information about some tariffs related to not just China, but also Canada and Mexico. I don't believe the major brands that have been sourcing from Mexico had anticipated this. So I think that is some new news that's definitely going to impact some people. I think one interesting thing to note is what's playing with Pinduoduo, which is the Temu owner, right? So we've seen Amazon try and fight Temu. We've also seen PDD trading down, yet they were on a huge run with all the Temu hype. I think if Trump starts to look there to eliminate the shipments that are coming directly from China into consumers' hands using the United States Postal Service, I think that they're going to have, a pretty considerably, they're going to have some headwinds against them. So I think PDD will continue to push money into the U.S. marketplace, but if Trump starts to turn, his view to eliminating that, they may have some tough times.
Before we let you go, someone asked about MELI.
Amazing.
Amazing.
That is the Amazon play of Latin America, right? So they are basically doing rinse and repeat what Amazon did here. They're also pulling in what Alibaba has done historically in China. So I think it's great. I think if you did not pull it on the dip, I think you should start to establish a position. Mercado Libre is going to be dominant for a significant amount of
What
time.
about Jumia or Jumia or whatever it's called? Isn't that the Amazon of Africa?
Yeah, but we don't really have the economics there yet for the average order, right? So the average order there is nowhere near where we need it to be. Is it a long-term bullish play? Absolutely. I don't think they're going to have the huge catalyst just yet.
All right, what's the hot toy? What's the hot thing for Christmas? What should Dennis get? Is what Dennis? Are they 7 and 10-year-olds now? How old are your kids?
I don't know. 7, yeah, 7 and 10. They move. I don't even know my own age sometimes, Joel.
Okay, so what? Tell us
7
what.
and 10. 7 and 10.
What?
And my
What's the
boy
hot
is not
toy?
into toys at all. He's done with toys. Girl
Cabbage
likes
Patch
everything.
dolls. What's the hot thing going to be out there, Ryan?
It's STEM related, right? So I would probably talk my own book. We sell a couple of brands within the 3D pen space. So take a
Ooh.
look at 3Doodler or Scribd, SCRIB 3D. You can get both of those on Amazon. So take a look.
All right, nice plug there, Ryan Craver, Commerce Canal, joining us every retail earnings season, breaking things down. Ryan, really appreciate. We know busy time of the year for you, so we'll be dialing you up, and we'll be dialing you up next quarter. Thank you very much.
Very good. Thank you for your time, everyone.
Thanks, Ryan.
That's fine.
All right, we are stuck here, Triple D. Not really moving around a whole lot. Are you seeing anything out there that you want to alert our traders and investors to?
We didn't talk the Amgen news yet. We probably should because it's not just moving Amgen, is moving everything else here as well. So Amgen came out with some weight loss data. I still have my half-size position in Amgen, which is getting even hit a little bit harder here this morning. It's down 12% here now. We know that they are working on multiple weight loss drugs. Data came out not great. I don't know if AB is gone here right now. So I don't have it in front of me, but the data was like 20% weight loss. I'm just going from my head. Not great. And this is why, Amgen's getting hit very hard here this morning. Also why you're seeing a significant rally in Lilly, Novo, and VKTX. The reason Lilly Novo go up on this is because Amgen is seen as the potential threat to the real third player in here. The main reason, because Amgen has money. Amgen doesn't need to get taken over to get their drug to market here. So if they can, obviously get through the hurdles, they're working on multiple weight loss drugs. If they can get through and get it up, they'll have the money to get there. But obviously, setback here for Amgen today is Lilly and Novo's gain. The reason VKTX is rallying on this is not only obviously the Amgen disappointment, but it's because now you think about Viking as still another potential takeout candidate here. Now, does Amgen come in and say, well, we got the money to get Viking there, and Viking's drug might be superior to ours? So there'll be people thinking like that as well. I think the Mizuho analyst said it great yesterday with Viking. They've got, something good they're working on here, but it's going to take a lot of money to get there. Viking kind of needs somebody to come in and buy them. Otherwise, they're going to have to do multiple offerings. It's going to take a ton of money to get, obviously from phase 2 to an improved drug. So even though lots of promise in the Viking data, it's the money that's going to take to get there that keeps spooking investors away from this name. So today's data with Amgen gives a little bit more hope that maybe, somebody will start looking at Viking. Still long Viking, still long Amgen, half-size position in Amgen only.
You are getting some corresponding pops here. Your Lilly trading up $32. Boy, oh boy, just a lot of overhead supplying here. Keep an eye on your pre-market high that comes in right at 796, and nothing on the dailies here. You just had like 3-4 really bad days, so really nothing in the book here on Lilly. You can look for some retracements here. Novo Nordisk trading up here, $2.50 at 107. I do see a pair of highs in this one right at this area, 107.70. So there is a look at some drug stocks on the move here. Christian, any of these on your radar?
Not really. I mean, those charts that you keep pulling up, I think, are really telling. Like that, the NVO, the monthly that you've got there on the right. I don't know if you've got a weekly chart in there too, but
I got a weekly for you.
These things, I think. I mean, look at that. That looks like a head and shoulder, like a textbook Head and Shoulders to me. And I think I'm just watching the group for now, 96, 93. And there is some news about the current administration giving some money for obesity drugs, but you also have a new administration coming in very shortly who's probably going to be pro like exercise. And I've seen, if all of these names are breaking down like this, I'm not going to be the one who's going to come out and catch, try to figure out where the support is. I'm okay waiting a little bit. Now, I know that like Novo and Lilly have other drugs than obesity, but I would be selling bounces in these things because I think they need to kind of continue to cool off and maybe base a little bit. So I know people look at these and they say, oh, like NVO is at 140, it's at 100 now. So it could be like your long-term buying opportunity. I think it's better to be buying here than it was, but I'm not sure if the pain is over with these stocks yet. So I'm neutral right now.
I mean, RFK is a wild card here too, and I think the reason these stocks have really gotten hit over the course of the last week is definitely the RFK sell-off. So we know he's a little lukewarm to obviously weight loss drugs. He's more about health and the natural ways here. So if RFK is in there, it's going to be a little bit more difficult to maybe have coverage on some of these names. So lots to think about here, but definitely the trade has cooled off. And with the case of Lilly, we've talked about this before, how much good news is priced into this name. I mean, when you do the comps, and we've done this exercise before too, Lilly, even despite the recent 25% sell-off here, is still trading 33 times forward earnings. When you look at pharmaceutical companies, comparables, you say, oh, 33, well, there's lots of companies trade 33. Not Big Pharma. Big Pharma, Merck, 10 times earnings. Pfizer, and Pfizer's got a mess, 8 times earnings. Even Amgen, just talking Big Pharma, is 14 times earnings, and that's before today's fall. So you're going to talk about 12 times earnings. I mean, when you're trading 33 times earnings, you're trading 3 times the valuation of comparables, of your direct comps. It's always like Lilly, Pfizer, Merck, Bristol Myers. We know I'm long Bristol Myers still because it got down to 6 times earnings, which was absolutely ridiculous. It's still only 8 times earnings with this big run. So, I mean, Lilly, from a valuation perspective, is still priced to perfection here. And if competition does come into the space, that's going to obviously, hurt the company as well. So today's pop is simply that the Amgen competition is now even further down the road. And that's why you're seeing the pop in Lilly today. But I'm with Christian here. I think the story has cooled off here. RFK in there. I think rallies to be sold in this name as well.
Look at the P. I just looked at the PE ratios on these. You're absolutely right. You're spot on. Look, that's 57 for Eli Lilly versus.
Yeah, and again, we like to look to the forward rate ratio, so it's 33 on a forward basis. Yeah. But yeah, I know, Christian. I mean, this we've talked about. Lilly has just gotten priced to perfection. Like they're going to be Lilly, and there's Novo, and nobody else is ever coming. Well, we know eventually somebody else is going to get there. Whether it's Viking, whether it's Amgen. It's hard to say, but it's also, it's just difficult to come in here and say, yeah, let's buy Lilly at 33 times earnings when its peer group is trading 10 times earnings. I mean, again, valuation only matters when the story cools off, but you know what's happened all of a sudden? The Lilly story has cooled off. So valuation matters now, and valuation is crazy high for this stock. That's why I'm staying away. I'm with Christian all the way. I'd sell the bounce.
Are you guys trying to talk about fundamentals and valuations and things like that? I mean,
it matters when stories start going down. So when the story, I'm going to interrupt Joel here perfectly again because I repeat this a lot of times in the show. Write this down. When the story is hot, valuation matters a zero. A zero. Story is hot, stocks are going up. When the story cools off, valuation is the only thing that matters. The Lilly story has cooled off here. It could get hot again. Maybe it gets hot, maybe for whatever reason. But you got RFK. You got a lot of reasons to think it isn't going to get hot imminently here. So, I mean, if it's the story's not hot, the momentum guys have cooled off, and the valuation guys are saying, are you nuts? That doesn't equal me coming in here and buying the stock here. So
because
that's my
you have
story.
The growth guys and you have the value guys, and the value guys are way down here, and the growth momentum guys.
Yes.
They're hitting the exits. I just pulled up Celsius Holdings here. Dennis, I was being a little facetious there to get that rant out
No,
of
I know
you.
you wanted the rant. He was trying to wind me up. Joel knows how to push all my buttons. I've known this guy for 30 years. He knows how to push all my buttons.
All right, do we want to do Abercrombie and Fitch? I mean, we still got some stuff to
Sure.
cover. Abercrombie and Fitch, let me pull up the chart and then I can give you the numbers here. Well, let's see. 250 versus a buck 83. Revenue 1.21 versus 1.05. Boy, full year outlook. They bumped that 12 to 13 to 14. Why did they hit this thing, Dennis? What if you saw that report? Why did they hit this thing to 146?
Again, maybe it's just, algos. Nothing was wrong with the report. Stock was $134 a week ago and then $160 yesterday. So in 3 days, the stock went up 15% ahead of the report. Again, that core strategy of mine, being long stocks are going to report here, just seems to work. Again, that was, worked here on this one as well. So maybe it's a little bit overexcited. The bigger question is, how long it was going to take for them to buy the dip. It didn't take long at all. It took 2 hours. Can't help themselves. They buy it right back. But unlike Best Buy, which, has now bounced the entire thing back or down $2, this Abercrombie and Fitch was actually a pretty darn good quarter. So I'd be more inclined to think that Abercrombie has follow through as opposed to Best Buy, which just bounced because, we buy the dip on anything. Not all dips are created equal. I like the Abercrombie dip buy better than the Best Buy buy.
Christian, any comments on enough?
I think the conference call is going out. You can see the stock jumping there on your short-term chart, whatever you got, 30 minutes over there.
Yeah,
I think the CEO is making some comments. Strong sales to start holiday quarter. We've heard that now a couple times. So I mean, I think that will help. And I think, just watching some of these reports like this, where it goes, where the stock goes down and is now up. I like the reversals like this, so I would be watching Abercrombie today. I also do have, full disclosure, I did throw on an earnings trade. We talked to stock yesterday. I put on a weekly call spread, 162.5, 170. I'm going to need a little bit more help than the CEO's got to keep talking for me. So we'll see. But I did throw on a play for it, but I've got more to go to. Stock needs to go more for it to work.
What about CrowdStrike? You got anything? We were just asked about CrowdStrike here. They're due to report after the close today. Well, let's just forget about that outage there when it took it to $200. What a run here, CrowdStrike. Dennis or Christian, any thoughts on CrowdStrike reporting after the close?
It is. I'll go first. It is a name. If you look at the last earnings quarters, I tend to look at like what the stock does on earnings day. It's gone up regardless of like the situation that it had recently. It's gone up the last 5 quarters in a row. If you go back a little bit further, the last 5 out of the last 10 quarters, it's gone up 6 out of the last 10 quarters. So really, the last 5 quarters have been strong. I think we just had Palo Alto report, and it wasn't a great response. CrowdStrike has come in a little, well, not really that much, but I'm not expecting a big move out of CrowdStrike, but I think it could go up a little bit. Will I put on a trade for it? Probably not.
Triple D.
I'm long and ahead of the report. I plan on selling it, obviously ahead of the report.
All right. Well, that's going to wrap things up here on this Tuesday. Boy, we did. I think we got about just everything we needed. We did miss a few things, though. Great show. Thanks to Ryan Craver, Commerce Canal, joining us here today. Tomorrow, you know how I said we really don't have a good biotech analyst? Well, we're going to change that tomorrow. We're going to bring on Laura Chico. She covers the biotech industry for Wedbush Securities, Wednesday with Wedbush.
Sweet.
Yep. So we're looking forward to that. We got a slew of earnings after the close here. Dennis, 3D Systems, your symbol when you go public, Ambarella, HPQ, Workday, Dell, and also CrowdStrike.
Yeah.
It's a snoozer tomorrow morning. We don't have much.
Wednesday, Thursday, Friday, we're going to be
Yep.
slowing down in holiday trade. So there's really nobody reporting here for the next few days. Obviously, holiday trade we're coming into. But Black Friday, start thinking about those Black Friday trades here. I mean, those can get into play here for Wednesday, Thursday, Friday. We might start to see that happen.
Okay, folks. Thanks for joining us here on Pre-Market Prep. Back with you tomorrow morning, 8 a.m.